morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. What I'd like to do is talk about the equity markets this morning. The equity market rally continues. We pretty much talked about this last week. We have a pretty much broad-based rally. We saw the S&P power through its 200-day moving average. The NASDAQ still has some work to do. It's a little bit below that. However, all the indices have been up 5 weeks in a row. We have the NYSE advanced decline line moving higher. Transports are leading this. There was a big divergence last year. Transports were not staying in sync with the market. We have small caps participating. So everything's firing pretty good on all cylinders. However, the one troubling spot is we continue to see, I talked about this last week, that utilities and staples are outperforming the rest of the market. And pretty much you want to see more growth industries participating in this rally. So we did talk about some of the things we saw in the semiconductors last week. Those breakouts are working pretty good. They're still at the pivot. Some of the stocks like MaxLinear, Maycom, Broadcom Limited, NVIDIA's at a pivot point. So that's good to see. And also we see a lot of good action in retailers, and that's how I want to get to one of the stocks today. We see a lot of retail stores like Ross, TJ Maxx, even Abercrombie and Fitch coming out into new highs, and that's a really pretty good sign. And also we're seeing a lot of action in the so-called discount variety retail space. We had Dollar General breakout, Dollar Tree pretty much at a pivot, Five Below, Teenage Discounter acting right there. And the one we're focusing on right now is called OLLI's Bargain Outlet. The symbol is OLLI. OLLI's came public in last July. Pretty much formed a long base of consolidation, tried to pop in a new high at the end of January, and then came in with the market. And now last Friday on strong volume, it took out that pivot at 22.53. So that's our buy point. We started accumulating shares there. We're picking up some shares this morning. However, you don't want to trace that past the 23.65 area, and I'd probably use 21 as a stop just in case the trade doesn't work. It's a small cap, and small caps can be volatile. However, small caps are doing much better than the larger caps in this market. Also the reason we like OLLI's is it has double-digit revenue growth in an area around 21 to 16%. Earnings have been coming in at 38 to about 40% in that range over the last few quarters. The company guided going forward. They upped their guidance. And right now they have about 200 stores nationwide in 17 states, and they think they can grow that over the next 10 years to a little over 900 stores. So that's about a 15% year-over-year growth rate in stores. So that's something you might want to consider. The sector's right. It's something new to the market. So, but as always, you got to mind your stops. So as always, let price and volume be your guide. So in summary, the market's in an uptrend. You can take a look at this, consult your financial advisor if this trade's for you. And as I said, let price and volume be your guide. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Have a great week trading.